Margaret, you can hear me? Margaret, you're speaking because it appears you're on mute.
Andrew, are you able to hear me?
Yes, I can. Can you hear me?
Oh, fantastic. I can hear you. 1 minute, we should be starting shortly.
Thanks. You can see me? Am I clear?
Yes, sir. We can see you from PwC, PricewaterhouseCoopers. Yeah?
Thanks.
I'm assuming that's still the name.
Yeah, yeah, it is.
Yeah, no longer, it was Coopers and something
Libra.
when you guys began, yeah?
Coopers and Libra. 10 to
Yes,
12
cool.
years ago. Yeah,
And then you merged with the House of Price, yeah?
yeah, yeah.
Just 1 minute to our taxpayers. If they've logged in, kindly just give us about 2 more minutes. We should be starting shortly. Thank you. Good morning to our esteemed taxpayers. Please just chat me up in the chat box. Let us know where you're listening to us from. We would like to know where you are. To our landlords, to our tenants, karibuni sana. Hii ni shirika la mashauri la ushuru. Tawakaribisha nyote. I will be your host this morning. My name is Karano Mushiri. I will be joined shortly by my panelists, Mr. Francis Baboya Hiribai of the Kenya Revenue Authority and Mr. Andrew Wanjiru of PricewaterhouseCoopers. I am so happy to see from Hannington Noah. He's telling us that he's listening to us from Ahero Town. Hey, is it Koro? Is that how we greet from our friends? We would like to hear from you in your natural language, our natural tongue. Kenya is a country of diversity, so we welcome all diversity katika hii mashauri la ushirika la ushuru. We have from John, he says good morning from Buruburu. Wasi wa Islando, niaje. My fans, we have Emily who says she's happy that she can finally hear us. Thank you, Emily, for your patience and for staying in touch with us. Do we have other people listening to us? We have Amuhaye listening to us from Kitale. I believe that would be, please help me here, my friends from Kitale. How do we say hi from Kitale town? Mutusalimie na waomba. I see Wilfred asking if we shall be updating on the collection of landlord data. Those are some of the things that we're going to be addressing shortly. Wilfred, asante sana. Also, if you have questions, just know that you're going to be answered. You can also keep them coming in. We have Dickens Otieno coming in from Sony Sugar, Migori County. Watu wa Dala Town, tumefurahi sana kuwasikia. We have Joseph Omeno coming in from Nairobi. Paris Njoroge listening to us from Parklands. Hello, Paris. We also have Maggie Gatua listening to us from Roosters, Nairobi. I believe Roosters is a fantastic place for some nyama choma, although it is only, I believe, 10 in the morning, lakini it's a Friday, kwa hivyo twafurahi. We have Phoebe from Muthaiga, the place where we all want to live at some point, I believe. We thank you, Phoebe. If you're a landlord or a tenant, karibu sana. We have Brian Kula listening to us from Kisumu. Hello, habari yenu. Dominic Arek from Kisumu and Vicky from Nairobi. Good morning, all of you. I would ask at this point Andrew to turn on his camera. We are just waiting for Mr. Francis Baboya Hiribai and ndio aweze kutusalimia. This morning we are gathered to discuss all matters rental income. More so the monthly rental income. In taxation, we have two ways of accounting for rental income. We have the annual mode, which just as you're filing your normal annual returns as an individual or as a body corporate, where you calculate for your income less your expenses, where now from which you charge the profit. from which you shall get 30%, or you can have the more affordable or the more reasonable monthly rental income tax, which is only 10% monthly. But those are things that our panelist today, Mr. Andrew, shall be taking us through with his counterpart, Mr. Haribai. We also want to recognize that we have Lebrit from Nairobi who is saying hello. We have Daniel saying hello from Eldoret, as he has written LD. I suspect highly that is a person from Nairobi. We also have Martin from Nairobi and Hasina from Mombasa. Thank you. I believe that if you want to say hi, of course, we shall just continue recognizing as they come along. At this point, please allow me to just move into the program of the day where we can learn more about monthly rental income. Before I invite Mr. Andrew to say hello to all of us, let me introduce Mr. Andrew, and then after that, he can tell us a little bit more about himself. Mr. Andrew Wanjiru is a manager with the PricewaterhouseCoopers. He has 6 years of working experience in tax matters. He holds a Bachelor of Economics degree from Kenyatta University. Watu wa KU namna gani? He also has an advanced diploma from the International Taxation from the Chartered Institute of Taxation, United Kingdom. He is currently undertaking a financial modeling and valuation analyst certification from the Corporate Finance Institute. He is also a member of the Institute of Certified Public Accountants in Kenya. Andrew addresses issues with respect to direct tax matters and has extensive experience in the various sectors gained by carrying out tax advisory assignments, tax audit supports, corporate restructuring, and tax health checks, amongst others. So I believe this morning we are in very competent and capable hands to answer all matters monthly rental income. Andrew, please say hi to us and tell us something a little bit more about yourself. Andrew.
Thank you very much. As you've said, my name is Andrew Wanjiru. I'm manager within the tax team at PricewaterhouseCoopers. At PwC, we are largely known as the audit firm, but we do have other units, including tax, where we are a team of 150 plus tax professionals. So I'm part of that, the tax team, and what we do on a day-to-day basis is largely assist our clients on all facets relating to any tax issue that they might experience, which includes, direct taxes, that's your corporate tax, withholding tax, pay as you earn, statutory deductions such as NSSF, NHIF, and NITA payments. We also do quite a bit of work, with regards to, indirect taxes. That's your VAT, your customs, your excess duty. And so, it's a fully grown team here, and happy to be part of this, KRA webinar where we discuss and go around a discussion on the monthly rental income. I know since it was introduced by the Finance Act of 2015 and later became effective 1st January 2016, there's been a lot of questions and a lot of implementation challenges, and there's some, even regulations which have been published by the Revenue Authority. We've seen a lot of attention by the Revenue Authority just to grow the revenue base arising from their monthly rental income. And I thought this webinar is quite timely because then we get to engage with the taxpayers, answer the questions they might have, as well as provide insights on what exactly is monthly rental income tax, how it is computed, and lastly, generally a conversation on what exactly are the implications for non-compliance. So happy to be here and looking forward to an engaging conversation. Thank you.
Thank you, Andrew, for that wonderful introduction. I mean, you even captured what it is that we're going to do today. He just summed it up in 3 very key points. Number 1, what is MRI, monthly rental income? Secondly, how do you compute for it? And last but not least, what are the implications of the penalties for non-compliance? For those of you just joining us right now, we will be recognizing everybody from where they are. We have Lois, who has said hello to us. We have Edwin Olo, who is joining us from Kisumu City. Now, as we discuss, I want you to know that PwC are actually some of the partners that KRA engages to ensure and facilitate that there's tax compliance amongst taxpayers. We really do partner with these big four institutions, of which PwC is key. They do come to us to even seek guidance on matters compliance. And we also consult them when we're looking to come up with new frameworks in terms of facilitating taxpayers. Why? Because they are the ones in touch with you. So we are very happy to have Andrew from PwC with us today to explore matters MRI. You know, last week we had the Taxpayers Summit as KRA, and one of the directives that the head of state gave Kenya Revenue Authority was to ensure that when we are meeting with our stakeholders, in this case, you, the taxpayer, we are to keep time. And because you are the investors in this nation, you are the people who are ensuring that we have tax revenue for which we can facilitate government expenditure. You are the most important people in the room. So thank you for being with us this morning, for taking the time to join us, and for ensuring that kulipa ushuru ni kujitegemea. Allow us to just get into today's function, and I will allow Andrew to just break it down for us. What is considered rental income for tax purposes? Andrew.
Thank you very much. When you're talking about rental income, you would ordinarily talk about two particular items. So for a landlord, you would be getting two types of rental income. It could be commercial rent or it could be residential rent. And so today's focus is largely on residential rental income, but we will do have tidbits here and there on commercial rent income. And so for tax purposes, when you're talking about residential rental income, you're talking about a landlord who is resident in Kenya and they have an immovable property. And so what they have done is provided a tenant with the right to use or the right to occupy that particular residential property. Also, from a tax perspective, it is important to look at how much exactly are you getting from your rental income. So for tax purposes, rental income is considered to be rent which is more than 288,000 shillings a year, 288,000 shillings a year, up to 15 million shillings a year. So anything falling within that bracket is considered as rental income. And so, in terms of the legal provisions, then we'll be looking at, Section 6A of the Income Tax Act, as well as the income rental income regulations of 2016, published by the Cabinet Secretary in charge of Treasury back then. So I think that sums up what my view on of rental income is, especially from a tax perspective. Thank you.
Thank you, Francis. At this point, I would also like to recognize in the room that we have your co-panelist, Mr. Francis Haribai. Before I allow Mr. Francis to say hello to us, allow me to just introduce him to us. Francis is a Bachelor of Arts Education graduate from the University of Nairobi. You know, I've been informed very many times that you can't just say University of Nairobi, you have to say the University of Nairobi. He has professional qualifications as a CPA. He joined the Kenya Revenue Authority in 1996 as a graduate trainee. In fact, he was in the first cohort. He is GT1. He trained at the Krati, it was known as Krati then, but now it is Kestra, from 1996 to 1998. He was trained as in income tax, value-added tax, and customs and excise duty. He was deployed to the large taxpayer office and worked there between 1998 and 2014. Thereafter, he was then moved to the medium and small taxpayers office in 2014, and thereafter shortly was moved to Mombasa, still within the same capacity, South Tax Station and Southern Region. He was in the compliance program and then was moved to be the head of the Taxpayer Services Program. After the restructuring within DTD, he was briefly appointed to head the tax base expansion in Southern Region. Thereafter, he was deployed as the manager of the A-Pins at Mombasa South TSO. In 2019, he was transferred to the Public Sector Division and posted as a manager PSD Southern Region. In July of 2020, he was then transferred to the County Revenue Division here in Nairobi. He served as the manager of West and South clusters and in charge of revenue in 8 sub-counties out of the 17 sub-counties in Nairobi. And that was an assignment he carried out until the end of the agreement between Kenya Revenue Authority and Nairobi County. and the functions were thereafter transferred to the City County of Nairobi. His current assignment within CRD is that of monthly rental income data collection in the City County of Nairobi and the Nairobi metropolis. As you can see, Francis is a seasoned tax practitioner, not only with experience in Nairobi, but throughout the country. At this point, allow me to ask Mr. Francis Haribai to say hello to us. Mr. Francis? Mr. Francis, you're currently on mute. If you could please unmute, because I can see you're speaking to us.
My apologies.
We can hear you now.
Thank you very much for the good introduction. My apologies for joining late. I'm at Samia Business Park, KRA offices, and we had a fire drill. So it started just before 10, so we had to assemble at the fire point, and everything went well. But I'm back now in the office, and then I joined. Thank you very much. I actually appreciate you've said in brief about my introduction, so I don't need to add anything more. I look forward to a very good engagement with our attendees and my co-panelist, Mr. Andrew. Thank you.
Thank you, Mr. Francis. And as you just come in, we just move into your question, actually, because there's some things that we feel that we would like to have an insider's perspective on. We just want to know that from the Kenya Revenue perspective, who is eligible for MRI and what category of rental income earners are exempt from MRI? Mr. Francis, can you hear us? Mr. Francis, are you still with us? I think, as you can see, as he mentioned earlier, he said that they were having a fire drill. As you know, safety is paramount in any institution, and we shall just allow him 2 or 3 minutes to ensure that he settles down. Thank you. I can see we have Mr. Francis back. Mr. Francis, can you hear us?
There was a bit that your sound was broken, so I didn't get the first part of the question that you raised. Sorry, if you could repeat.
It's okay, Mr. Francis. That is why we're here. Who is eligible for MRI and who is exempt from MRI? That is the sum of the question.
Oh, thank you very much. The person who is eligible to register for MRI is a Kenyan resident who earns a rental income between 24,000 and per month and 1,250,000 a month, so that the annual rent would be that amount multiplied by 12, and then the upper limit will be 15 million. Then the persons that are outside that bracket, those people earning rental income below 24,000 a month, and those earning rental income above 15 million in a year, those are exempt from the MRI regime. However, it does not mean that they do not pay taxes. They are not exempted from taxes. They are required to include and declare rental income when they file their annual income tax return. The main difference is that the category that would file the monthly rental income will not be allowed to claim expenses, but the category that is exempt from MRI are allowed to claim the expenses that relate to that income. So when they declare their rental income at the end of the year, they need to prepare a rent schedule that will bring the gross rent, and then they're allowed to claim the expenses relating to the generation of that rental income.
Thank you for that very concise answer. In fact, Mr. Francis, I can see that one of our participants, Mr. John, was asking what happens to those who are outside of those particular ambits, and you've already responded to the query he raised. I believe, Mr. John, you answered. To our participants, of course, you're free to put in your questions as they come. If it is something that may be answered by a panelist as we go along, of course, we shall do it. But please feel free to raise any queries you have. That's why we're here for you today. Now, Mr. Andrew, I'm sure that you deal with taxpayers as they come to you. And I'm sure one of the things they may ask you is, how do we register a property for MRI? They are free to seek the same services from a carrier office. But given that you're our partners in this nation building exercise, please just tell us, if somebody comes to you, the taxpayers that you deal with, and they want tell you, we want to register property for MRI, how do they go about it?
Thanks for the question. The first bit of it is, building on what Mr. Francis has said, is assess yourself whether you are actually eligible or required to pay monthly rental income tax. You'd ordinarily look at the type of property you have. Is it residential or is it commercial? You look at the income you are actually earning. Is it between 288,000 shillings a year up to 15 million shillings a year? And then to that extent, then you have then to log in into your iTax profile, specific iTax profile, depending on whether you are a company or an individual. And then thereafter, you do have, once you do log in into your iTax profile, is then make an amendment to your tax obligations to add the rental income tax as an obligation to your KRA PIN. So after that, then what you do is on every month is then the requirement to file a monthly rental income tax return and subsequently make the payment. And we will thereafter, I think later on, discuss about the timelines and how to compute that specific one. But in a nutshell, I think iTax is your friend when you're looking at taxation of residential income. And so to that extent, that such transactions in terms of registration would have to be performed through iTax. Thanks.
Let me ask you, Let me ask you as a follow-up. When you register for an obligation through the KRA platform, you tend to see if you register for VAT, it appears as a VAT obligation. If you register for pay, you see pay. Is that the same case with MRI?
So for rental income tax, you might find that when you're looking at your KRA PIN certificate, you might find that the rental income tax obligation is really not there. But that doesn't mean that you're not registered for rental income tax. The most prudent way to find out, especially if maybe you haven't logged into iTax profile for a long time, is just to check, how when you go to your iTax platform, there's usually a record of the returns you've been filing and the payments you've been making. So you can always, especially when you've forgotten whether you had been registered or not, you can just query about the previous returns that you had filed, and then you just see your rental income tax returns and payments on that front. The other way to look at it is from your iTax ledger. Your iTax ledger also does have liabilities or payments that you've made to the Revenue Authority. You'd ordinarily find such liabilities in your tax ledger to the extent that you've actually forgotten whether you were registered or not. And this would especially be for landlords who maybe had a residential property at some point and then disposed it off, and then they have subsequently acquired it after a couple of months. That's one way of looking at it in terms of looking at your ledger, all returns and the payments you've made. But then at the same time is also going through your platform, your iTax platform, and trying to file a rental income tax return as well. So that would be a response for that.
Thank you, Mr. Andrew. Now, Mr. Francis, Andrew has taken us through the process of registration. Now, I'm sure as the Revenue Authority, you are more interested in the actual collection of that revenue that is derived. And we have seen that in past regimes, one of the ways that you ensure collection is through withholding income. Do we have withholding rental income? And if we do, how does it work? Mr. Francis, you're on mute.
Thank you so much, Waziri. We do have withholding rental income, and that regime was introduced to cover rental income on commercial buildings. So the designated or the appointed agents who are tenants are expected to hold 10% of the amount of rent they pay to their landlords. And that amount is supposed to be paid by the 20th of the following month to KRA as withholding rental income.
So, Mr. Francis, you were very specific in mentioning that it's for commercial property. Does it mean that if somebody is in a residential unit, that they do not then get to withhold income on residential property?
Thank you, Bashiri. For the withholding that is applicable on residential properties, that is applicable in cases where the owners of the houses are non-residents. In that case, the withholding tax rate is at 30% on the gross rent. Unlike the case for MRI, where it is at 10%, for cases of non-resident landlords, the withholding amount is at 30%. But so it is only applicable to cases where the owners of the property are non-resident persons.
Thank you for that clarification, Mr. Francis. Now, at the beginning of the conversation, Andrew, you had said that one of the things that we are going to do is look through how do we compute for MRI. So I would like at this juncture to give you opportunity to take our very able taxpayers. How do we compute for MRI? How is it computed? And if a landlord, because we mentioned a bit on commercial, if a landlord has both residential and commercial entities, how do they account for that? So it's more like three questions in one.
Yeah, thanks for that. I'll start with the question on how to compute. Yeah. So from a computation perspective, for monthly residential income tax, you do compute 10% of the gross rent that you actually receive on a monthly basis. So there is really no adjustment in terms of how much you've spent or whether you are making a profit out of the residential income or not. What you'd ordinarily do if you are receiving 10,000 shillings from one unit, and maybe you have say around 5 units, so that's around 50,000 shillings total. So what you do is every month is then compute 10% of the income you've received, gross rent, and then make a payment to the Kenya Revenue Authority on a monthly basis. Now, for landlords who are below, and Mr. Francis had actually alluded to this, for landlords who are below 288,000 shillings a year, or more than 15 million shillings a year, then you're then required to account for that tax on an annual basis through your income tax return. Yeah. However, you could still, even though you are within the bracket of paying monthly rental income tax, that is, your income is between 288,000 shillings a year and 15 million shillings a year, you can still elect to be taxed under the annual regime, but we'll get into the specifics of how you'd ordinarily then tax that the same on an annual basis. It's also important to mention that there are people who residential houses or landlords who would ordinarily be receiving rent, maybe most commonly it's monthly basis, but you'd find others who are quarterly, semi-annually, or others who are on an annual basis. So to that extent, then you would pay or compute residential income tax at the point of that you receive the gross rent. But then it's important that to note that even when you do not receive a specific in a specific month, you do not receive that specific income, it's important to still file your rental income tax return in iTax. So at that particular point, you'll be filing a nil return because you do not have a specific income. Now, moving on to the next question in terms of the commercial and residential. So it's important to still mention that from a residential perspective, is you said it's 10% of the gross annual of the gross rent received. But then from a commercial perspective, if you have a building which is residential and the other one is commercial, then you would ordinarily and naturally have to treat them separately, because as Mr. Francis said, the rental income from commercial property is taxed at a rate of 30%, and is also subject to VAT as well as withholding rental tax. So you have to compute the tax arising from the commercial property and the residential property separately. However, to the extent that you find that that is quite onerous in terms of it's quite a bulky and engaging exercise, then there is still an election you can make to the commissioner, and we'll be delving into details on how to make that election. And that election, what you'd be doing is then requesting the commissioner for leave, that you, instead of filing the residential rental income tax on a monthly basis, you elect to be filing that return on an annual basis, so that then you do not have it becomes a little bit easier for you. Instead of maintaining two separate books, then you do have one separate, one combined book that has both residential and commercial. But we'll get to the details on how you can actually make that election, what you need to do, and how the timelines that are associated with that. Not sure if I've answered the questions that you wanted me to cover, but happy to have a go in case I've missed any. Thanks.
No, that was very quite clear. However, we do have a question from one of our participants, Mr. Jeremiah from Kilifi, and it's in relation to what you just explained. He just asked a very simple question. What is the difference between commercial and residential rental property? Maybe for purposes of just clarifying on this issue of how to account for them, you could delineate between commercial and residential rental property. Andrew?
Thanks for that question. What I would say is it really depends on the tenancy agreement that you have with your tenant. Yeah, you'd look at what are the conditions that you've laid out in your tenancy agreement, and I think good examples of commercial property is where you as the landlord, you give out your property, or you give the right for a tenant to use or occupy that specific property, so that then they are able to make money out of that specific business, out of that specific property. And I think the most common one is where you see a landlord has a building which they are leased out to tenants, and then the tenants, what they're doing is carrying on business out of that specific property. And a good one is a mall. So if you have a mall and you have maybe a supermarket there, you have eateries in there, you see that's commercial rent, because what the tenants would be doing is carrying on business out of that specific property. But then from a residential perspective, it's a tenancy agreement, which then what you're telling your tenant is that then I've given you this house to reside or to stay in it. And you might find that in some instances, subletting or doing significant modifications or the rights to use that specific property you've been given to reside in are quite restricted. So it's important to always look at what exactly is the arrangement between the landlord and the tenant, so that then you adduce specific or significant evidence to KRA whether that building is actually residential or commercial.
Thank you, Andrew. Now, Mr. Francis, at this point where Andrew has clarified for us how to account for this, you may find that some taxpayers in the course of filing may opt to claim some expenses under this MRI regime. So I think for me, what I would like to understand is, are taxpayers allowed to claim expenses under the MRI regime?
Thank you, Muchiri. Under the MRI regime, the taxpayers are not allowed to claim expenses, and that is anchored in the law. The tax regime for MRI was made very simple to make taxpayers find easy to comply, because unlike the annual rental income regime, where data is supposed to be kept records of the supporting expenses are supposed to be kept. And then the net income, if it's a corporate body, as the owners of the property, the rent income is charged at 30%. For individuals, the rate of income will be the graduated scale, all the way from 10% to 15, 20, 25, up to 30. And most likely, for a person who is earning other sources of income, like an employee who also has a rental property, the chances are that the other income in form of employment would already be charged at 30%. So that means ordinarily, if such an employee would have declared the rental income and subtracted maybe the expenses that are allowable, then the net rental income will be charged at 30%. So there's a lot that went behind several years back to arrive at the rate of 10%. And I think maybe because of the time limited on this particular session, we might not be able to capture and understand and explain the background. But then the 10% rate of MRI took into consideration that there would be expenses. But then the tax rate of 10 is actually the lowest amount in income tax, equivalent to a person who is earning maybe per month between the lowest bracket. So that's why it was decided and the law was passed that under MRI regime, then the landlords or the taxpayers earning rental income are not allowed to claim expenses.
Just a follow-up question on that, Mr. Francis, which has been raised by one of our attendees today, Mr. Mundrika Patel. And this is a question that actually comes up in a lot of tax service offices. So the taxpayer or the landlord normally charges rent of, say, 20,000. But on top of that 20,000, they normally maybe provide garbage collection services, maintenance of the lobby, and you'd find that so per month the tenant pays the 20,000, which is the rent, and maybe another 2,000, which is an administrative fee for maintaining the general ambience of the property. So his question is, does he charge MRI on the 20 or does he charge it on 22,000?
Thank you, Muchiri. We appreciate that particular question. The amount of MRI, the amount of rent that will be subject to the MRI, using the example that was given by the attendee, is 20,000. So if they are 10 all paying 20,000 rent and 2,000 as service charge, then the amount subject to MRI for that particular landlord would be the 100,000. That is 20,000 multiplied by 5 units. That is the 100,000 and not 110,000. Thank you.
Thank you for that, Mr. Francis. And I'm sure that has answered a lot of people, especially where service charges are concerned. Now, we normally see that in this day and era of technology, you don't have to go to a hotel to find a place to sleep. So we normally have Airbnb businesses. And I'm sure, Mr. Andrew, you have faced this type of questions before. So what is the place of MRI in regards to Airbnbs?
Thank you very much. I think that's a very important question and very factual and practical. I think it's important for us to make reference to the law first because, administration of taxes are actually ordinarily based on tax laws. Yeah. As I initially mentioned, monthly rental income tax was actually introduced by the Finance Act of 2015 with an effective date of 1st January 2016. And of course, the cabinet secretary in charge of treasury back in 2016 did give guidelines and on regulations on administration or better administration of monthly rental income. But back then in 2016, the prevalence of Airbnb and technology in property property management and such kind of an arrangement was not quite prevalent. And so our tax laws may not have envisaged such a situation where maybe a residential house is actually used, to get commercial income. Yeah. But that notwithstanding, the law not very expressly providing for that. In my view, it would largely boil down on what exactly are the tenancy agreements between the landlord and the tenant. Yeah. So you might find that the specific landlord or the owner of the property is the one who has decided to set up a full apartment, and then from his own perspective, and what he's doing is just letting out the entire property for Airbnb. Yeah. And so you might find that in such a situation, there is might be reasonable to argue that in such a situation that income might be considered as a commercial property, to the extent that it's really a commercial property that is actually trying to get commercial income, because it's very difficult to attach a specific tenancy agreement between a landlord and that very many tenants from who are coming to Airbnb. But that's a little bit different when there is a landlord, a tenant, and then the tenant is the one who is actually running Airbnb from that specific house they have leased. So in such a situation, it will still depend on the tenancy agreement and the specific facts, but we would ordinarily find that when there is an agreement or there's a specific agreement between the landlord and the tenant that the building is to be used for commercial purposes, then because tax will always follow the transaction or the agreement, then in such a case it's possible to argue that it's really commercial property. But if it was a residential property, and then the tenant has still extended some Airbnb services, then in such a case, it could be argued that then it's residential property and therefore falling under MRI. But the above notwithstanding, I think it's always important to look at the specific facts and circumstances of your specific Airbnb business, because it would really boil down on what is the arrangement between you as the landlord and the tenant you have given. So, have you given them leeway to do Airbnb, or is it something that they are doing without your knowledge? So those are some of the specific facts that we need to look at. But then lastly, it's also important to consider that there are two parties. There's the landlord who is the owner of the business, and then there's the tenant who is running Airbnb business from a leased or a leased property. So there could be different tax implications for both the owner of the property and the tenant who is running the Airbnb business. And so, as I mentioned, in conclusion, it's good for us to just look at what are the specific circumstances, and then we'll be able to thresh out the specific tax obligations and characterization on whether it's commercial or rental. Yeah.
So we did have a Miss Paris Naisola who had sought clarification on whether Airbnb is commercial or residential. So from what I'm gathering is that it's on a case-by-case basis. But would you like to give a general rule of thumb?
No, I think when you're looking at the general rule of thumb, it's very difficult to give a specific and quite particular advice on a clear-cut statement that it's subject to MRI or is subject to commercial rent. I think it's quite heavily reliant on the tenancy agreement. The type of tenancy agreement you'd have, for example, for a hotel, and you see hotels do have Airbnb as well. Yeah. So, for example, if you go to a specific hotel in Westlands and you've booked it through Airbnb, you see the hotel is already in the commercial business. You don't tax MRI on hotels because the hotel itself is already carrying commercial business or commercial activities. Yeah. But then that agreement that you'd sign when you're checking into the hotel would be different from what you have signed with your tenant who you lease an apartment for. Yeah. So I would say it's dependent on the tenancy agreement and the specific circumstances. But I think the key clause is to look at what rights has your landlord given you. If they have given you unrestricted use in that tenancy agreement and they're telling you you can still use that business for commercial purposes, then it is tending to lean more on commercial property. But if you have been heavily restricted in terms of what you can do to that property, and you've been told you can only use it for residential purposes, then it's leaning more towards the residential monthly income tax.
Thank you, Andrew. And I believe that even Mr. Hasina or Miss Hasina has been answered by that question because they had asked a similar question. Now, back to you, Mr. Francis. Now, after all of that is said and done, it is very important for payments to be done on time because we depend heavily on the taxpayer revenue to meet the government obligations of the day. And I'm sure that there are taxpayers out here who want to be compliant, but it just might be a matter of a lack of information. So to direct the question would be, what is the due date for MRI? And failure to comply with the due date for that MRI, what are the consequent penalties and interest for lack of compliance?
Thank you, Mr. Mshiri. True, we heavily depend on our clients or the taxpayers to pay the due amounts of taxes that are due. And not only just to pay, but to pay within the allowable period. The due date for payment of MRI is by the 20th of the following month. Most of us are aware that we've been tenants or we are tenants, and we find that most of the rent agreements spell out that the payment of the rent must be maybe the first week of the month, maybe by the 5th of the month. So if, for example, the rent that was paid to the landlord in the month of September, rather the month of October, that was paid by 5th of October. That means the landlord has been having that amount for 1 month, but then the payment would be done by the 20th of November. So there is no question of saying maybe like one was rushed. And then maybe for MRI, it is very important maybe to explain to our attendees that for MRI, the amount that is subject to MRI, the amount of rent subject to MRI is the rent actually received. This is not rent earned. In case a tenant, you have one single tenant who has not paid maybe for several months towards the end of the financial year, you still have to prepare your rent schedule based on the rent earned. But for MRI, it is based on the actual rent received. So if you have 5 tenants in that month, maybe 4 of them pay. You have been paying 12,000, of them pay. That makes it 80,000. So when you pay the MRI, you compute at 80,000 multiplied by 10. So the amount of MRI payable the following month will be 8,000 by the 20th of the following month. It will not be 10,000. However, the subsequent month, when that tenant who had defaulted or did not pay the previous month actually pays, and all the others pay, so there won't be any arrears, that means the following month you'll get 120,000. The amount of MRI payable will be the 120 multiplied by 10%. That means 12,000. So there is no question of saying the client has not paid. If the client has not paid, or some of the tenants have not paid, you calculate the MRI based on the amount of rent actually received. Having said that, after the due date, there are consequences if a landlord would not have paid the taxes, because the amount of penalty for individuals, the minimum amount for late payment of penalty, the late payment is at 2,000. at 2,000 shillings, and then 5% of the rent amount of MRI payable. So there's the late filing for in case the client does not file, the minimum amount is 2,000, that is the penalty, or 5% of the amount rate, whichever is higher. But then if the person filed the return but did not pay, then the same, another penalty will actually apply. That will be 5% of the amount rent that was paid late, or 2,000, whichever is higher. That is a penalty for individuals. But for non-individuals, these are corporates, the amount of a penalty in case of late payment of the rent, the MRI, after the due date of 20th, it would be 20,000 shillings, or 5% of that rent that is due, the amount of MRI that is due, whichever is higher. That is a position, and the same similar penalties are actually applicable in the case the person has failed to file the return by the 20th of the development. So it is always advisable to all our taxpayers, our clients. We value them so much. We normally advise that they file the returns early in a month, even if they will later on make the payment by the 20th, but they can file the return, generate the payment slips, and then make the payment just before the 20th. That is allowable in law. They can file the return like today, but actually make the actual payment before the 20th of the month. They will not attract any penalties, and that will be very, very much in order. Thank you.
No penalty for prepayment. That is the message of the day. And I believe that our taxpayer, Krunali Shah, has been answered, because their question was, is rent taxed on receipt basis as per Section 6(1) of the Income Tax Act? And I believe that, Mr. Francis, you have answered in the affirmative. However, you mentioned something that another taxpayer has asked, Mr. Noah Otieno. He asks that in the case where the property is completely mortgaged, and therefore any rental income that comes is going towards the payment of the mortgage, how do you account for it where MRI is concerned? Do we tax it, or how do we account for that, Mr. Francis?
Thank you, Mshiri. We appreciate the attendees and the questions that they're raising. The default regime for filing rental income is the MRI, the monthly rental income. That is the default. However, there is an option. The law allows a person to opt out of MRI, even if the person earns a rent of 12,000 a month, between 24,000 a month and 1,250,000 a month. The person can opt out by writing to the commissioner and requesting to be exempted from MRI. And in that case, once the commissioner approves that, that person would declare the rental income together with the income tax return when filing the annual income tax return. So that in it there, if there are other sources of commission interest, then there is a portion for rental income. That is a place where a person can easily handle and be comfortable, because the person will declare the rental income, and then that person would be allowed to reduce that gross rental income with expenses wholly and exclusively for the generation of that rental income. So if the property was purchased through mortgage, there will be mortgage interest. That is a matter of fact. And especially maybe the early part of the mortgage repayment period, the mortgage interests are likely to be very high. So that person is allowed by law to claim the mortgage and any other related expenses. For example, if there are repairs to the property, those expenses would be allowed. And then the net amount of rent is what will be subject to tax. Although now it will not be subject to 10%, it will be to the gradation between the 10%, 15, all the way to 30%, depending on the amount of net rental income after allowing your expenses. Thank you.
Thank you, Mr. Francis. I believe in the course of this conversation that Andrew and Francis have aptly answered questions in terms of how do you account in the case where you have a mortgage or you have a loan on that particular property? Because my follow-up question was going to be now to Andrew particularly, can taxpayers move from the MRI regime to the annual regime? I believe that has been answered very aptly. Maybe to localize the question, maybe it would be to ask you, Mr. Andrew, how do you apply to move from the MRI regime to the annual regime? Because you're the one that interacts with taxpayers and you advise them accordingly. Andrew?
Thank you very much for that question. You know, when you want to move from the monthly rental obligation to the annual one, is first of all assessing yourself whether you actually even qualify for the monthly one, as you know, to begin with, and that would be looking at the type of property that you have, as well as the income which you are earning. So if you have between 288,000 shillings a year, as well as 15 million shillings a year, so that bracket, then already you are subject to monthly rental income. So what you do if you want to move to the annual obligation, where instead of doing it monthly, you do it on an annual basis, the first one is to write a letter to the commissioner, and that letter would ordinarily, be depending on where you are what's your taxation. You would ordinarily address it to the to your tax station. Of course, then they would ordinarily have to guide you on the necessary steps in terms of approval from KRA specifically. But then at the same time, that specific letter for election for you to pay on an annual basis, you have to do it within 3 months before the year ends. Yeah, so you have to do it maybe by September thereabout before the year ends. And so KRA or the commissioner is required to respond to that letter within 60 days of receipt of the same. Otherwise, the KRA or the commissioner is deemed to have accepted that notice that you actually lodged. And these are the provisions of under the income tax regulations, monthly rental income regulations of 2016. But then it's important to note that to the extent that you still make that application, because if you are electing to be taxed under the annual regime, what is important to note is that it doesn't take effect within the course of the year. So you cannot apply in March and then stop filing in July, of the same year. So such an election only takes effect in the next subsequent year. So, for taxpayers who are listening to us right now, in terms from a practical perspective, because we are in November, it means that you cannot elect right now to be taxed under the annual regime and then expect that to come into effect on January of 2023. And the reason for that is because the law allows you 3 months before the year end for you to make that election. So whilst you can still make that submission to KRA on election to be taxed under the annual regime, to the extent that the KRA responds to you in the affirmative, or responds to you and agrees for that to happen, then that election can only take effect on 1st January of 2024. And so it's important for you to bear that in mind in terms of the timelines and which are provided by the monthly rental income tax regulations of 2016. I don't know if that really captures the gist of your question, but in case there's any follow-up question, happy to take that.
No, you covered it well. In fact, you even brought in an aspect of service level agreements. I would just like to notify the taxpayers here with us that the Kenya Revenue Authority has service level agreements with taxpayers, which are very well captured in the Taxpayers Charter that you can reference so that you can know the rights that are available to you as a taxpayer and the service that you should expect from any Kenya Revenue Authority Tax Service Office. So for the example that Mr. Andrew referenced, that we have to respond to a letter written to the commissioner regarding the movement from the monthly rental income to an annual regime within 60 days. And that is your right to have as a taxpayer. Before moving to Mr. Francis, there's a question that came in from Ms. Christine Kinage, which is in terms of accounting. Is MRI a final tax, meaning that you don't disclose it when filing your annual return? I think that is very important to respond for the purposes of accounting. Andrew?
Thank you very much. And it's also a very practical question. Part of the government's agenda, KRAs and the National Treasury as well, is to ease the pain of filing and paying taxes for taxpayers, yeah, reducing processes and procedures. And so what happens when, monthly rental income tax was actually introduced is that there was a provision under the income tax regulations on residential rental income tax. And what they did provide is that to the extent that you are under the MRI regime, then that specific income that you've actually been paying under the MRI regime is actually final tax. So the 10% that Mr. Francis mentioned that you pay on gross rent is actually final. And to that extent, at the end of the year, then you're not required to make that disclosure in your income tax return because it's deemed to be already tax fully paid.
Thank you, Mr. Andrew. And Mr. Francis, I believe I would be doing a great disservice to our taxpayers if I do not ask this question. We have been seeing reports in the news that KRA is coming to your house. We are going to go door to door. We are going to verify the number of taxpayers you have. In terms of tenants, so as to see whether you are declaring the right amount of tax. I believe it behooves you to set the record straight. So briefly comment on what the current data collection exercise on rental properties in Nairobi is all about.
Thank you, Mushiri. It is important to clarify, especially to our attendees, and we hope that this message will also reach a wider network of our clients. Yes, indeed, KRA has made a decision to send a team or team of KRA staff to go and collect details of ownership of property owners within Nairobi. And once it is the whole of Nairobi city county is covered, then that notice clearly indicates that the exercise will also extend to the Nairobi metropolis, which basically includes the suburbs around Nairobi, but in other counties like Ngong, Kitengela, Athi River, Mlolongo, Thika, Kiambu town, and those other surrounding towns. Surely this is a noble exercise. The purpose of the data that is being collected is for use by KRA. And that data is the control in terms of data security is very, very high. There is no, that information is handled with a lot of confidentiality. It's all treated with a lot of confidential. We've been going out for, this is actually the week, we've been going around Nairobi. So we visit the clients, we identify ourselves, and in case any client wants to confirm the identity of the officers that have visited them, they can always use the short codes that are normally indicated in the public notices, where they can confirm whether the staff that have visited the person are KRA staff. So the staff badges will be on display, and there's nothing to worry about and nothing to hide. There's a lot of misinformation that has gone out in the public some shared through social media, which is very unfortunate because the information that is being shared is actually out to cause maybe panic, because some would indicate very different rates of MRI, rates that are not even there. So we would like to advise our clients, that is the taxpayers, that they should have no reason to worry, because this we are doing is an obligation that any other person, any other taxpayer has towards the government, because payment of taxes is for all of us. All of us are an obligation to pay the requisite taxes. So thanks. I hope I have responded well, but if there's any other follow-up question, then maybe you can ask, Madam Shir.
Thank you for the assurance you've given to our taxpayers, Mr. Francis. It is always important to get the right information directly from those in the positions of authority that know what exactly it is that they're doing. So as mentioned by Mr. Francis, taxpayers have no need to fear. This is a very transparent exercise, but be rest assured that any information collected shall be treated with utmost confidentiality, because KRA abides by the Data Protection Act. I would like to notify our taxpayers that this particular session shall be available on the KRA TV. If you didn't know, KRA launched a TV recently. You can find it on www.kra.go.ke. It shall also be available on our YouTube page, Stories of Ushuru, where you can reference it and you can get further clarification. I can see that we had a question from Ms. Consolata Mora regarding what Mr. Noah had asked about mortgage, and therefore you can get the answer about the particular issue. At this point, please allow me to just ask two questions directly from the floor. I have tried to incorporate as many questions as we go along the way. We had scheduled this for only 1 hour. We have gone over by 5 minutes. So I will beg the indulgence of the audience to just further extend us 5 more minutes to just respond to two pertinent questions. I wish I could take all of them. I love the engagement that we've had from our taxpayers. If we had all the time, I would ask all your questions, but just allow me to ask one last question, or rather two last questions to our panelists, and then after that we can get their closing remarks and we can release everybody to go. We have a question from Emily, which I find very interesting. So we had addressed if you want to move from monthly to annual, but her question is a bit unique in the sense that what if a corporate entity wants to move from the annual regime to the monthly regime? How do they go about that, Mr. Francis?
Thank you very much. For corporates, the same was extended. When MRI was started, it was only allowable, or that window was only allowed or afforded to individuals. However, the subsequently, that included even corporates. That a corporate would prepare annual returns for commercial businesses, and then the bit on MRI or the bit on monthly on rent would be subject to MRI. However, if, for example, we have a case where a corporate is already declaring the rent in the annual return, income tax return, and wishes to opt to move to MRI, the requirements will be the same. That corporate body need to write to the commissioner to make a request, so that subsequently, because the MRI tax is final, subsequently, when they declare their annual, when they prepare their annual return, they would declare the other sources of income in the form of businesses and other sources. However, the rent would have been accounted for during the month under the MRI. So they can still write to the commissioner, and the commissioner, once the commissioner approves, of course, bearing in mind the issue of their year end, okay, their accounting period, they have to take into consideration that, so that now it matches with the relevant accounting period, so that by the time they opt out or they get the approval from the commissioner, that will not distort their income tax return, to avoid a case where part of the return income is declared during the for annual, and then part of income moves to MRI within the same financial period. So a corporate can still sorry about that. On the same note, I just want to remind when a question penalty for failure to pay the MRI in time, there is an additional, apart from the penalty, there is interest for any outstanding amount. So maybe the attendees can note that apart from the penalty for late filing or late payment of the taxes of 5%, there will be an interest amount charged at 1% per month until the time when the amount of tax. Thank you.
Mr. Francis, towards that response. There have been a lot more questions on the issue of mortgage. I can see a lot more questions on the issue of waiver, and some of them have been addressed in the past. I would just like to remind our participants that this recording shall be available on www.kra.go.ke. Just click on the KRA TV icon. You can also find this recording on the Stories za Ushuru platform on YouTube. At this point, allow me to ask one question that I don't think has really been captured, and let me direct this to Mr. Andrew. What if I have a commercial property and I pay VAT and installment tax? Should I then again pay the rental income tax? Kindly advise on this 10%. This is from a Vaseline.
Thank you very much. You see, there are two, when you're talking about rental income tax, you're talking about there are two types of even commercial of properties. There could be the commercial element of it and the residential bit of it. Yeah, I think the conversation today has been heavily, geared towards the residential income tax, which is a monthly obligation, which is, as you know, the discussions herein is subject to tax at the 10% of the gross rent received and payable at the same time on a monthly basis, yeah, without making any allowable deduction or deducting any expenses. There's, however, a different type of rental income, which is the commercial rent. So for commercial rent, the taxation is a little bit different. So the taxation for income tax purposes is 30%, and then subject to allowable expenses. So whether you're paying your caretaker or taking care of electricity for common areas or water bills, you're allowed to deduct that, and then 30% tax on the taxable income after making that specific deduction. It's also subject to the withholding tax as well, dependent on whether your tenant is subject has been appointed as a withholding tax agent, and Mr. Francis actually did cover the withholding tax bit of it. And then when you're raising your invoice for commercial rent, they're still subject to VAT. So I think, in a nutshell, it's important to distinguish between commercial rent and residential rent. And this is specifically also for purposes of the Airbnb business that we talked about. It's always good to distinguish between commercial rent and what is residential rent, because both of them have different taxation elements. And so the moment you're able to characterize a certain income or as to whether it's commercial or rent, then it follows, from that characterization on how to approach the tax. So I believe that that answers it. But I don't know if there's any follow-up question you have on that, just to make it absolutely clear.
On that one, I think you have been very clear. Allow me to ask this one last question because I've seen so many people asking it, and I think I would be doing them a disservice if I didn't ask it. Mr. Francis, if somebody wants to deregister from the MRI regime, how do they go about it? Are there timelines? Are there requirements? Please, just a quick answer on that so that now we can wrap up this session. Mr. Francis?
Thank you very much. If a person wants to deregister, the only reason is when the person has stopped earning the rental income. That should be the only reason. Otherwise, if they want to move from, if they are continuing to earn the rental income, then they are expected either to be either in the annual regime or in MRI. But if they want to register, I want to believe maybe that it would be a case of a person who is not earning rental income. They need to go into iTax portal, then apply for removal of that obligation. Then that will have to be approved by a person in the TSO where the PIN is domiciled. They may request for more information. They may, the officers may call for an interview, maybe on the phone or through an email, try to get more information about that. So if the property maybe has been sold, okay, so the person is no longer earning that rental income, then the person must have the proof and evidence of that, okay? Then that would be approved, and the person will not have the a month MRI nil return, so that there will be no penalties that will be charged because of non-filing or late filing of returns. And that's the moment it is approved, then that means the obligation for MRI would be removed from the PIN, and the person will stop filing a monthly rental income.
Thank you for that response, Mr. Francis. Ladies and gentlemen, that has been our time. Allow me at this moment just to please ask the panelists to give their closing remarks before we call it a day. Mr. Andrew, at this point, the floor is yours. Andrew, I think you're on mute. We can't hear you.
Sorry about that. Yeah. I think thank you very much. It's been a very engaging conversation. We've definitely not answered all questions, but hopefully we'll get another opportunity to have a conversation with the taxpayers, just to educate them and have a conversation on any practical implementation challenges they are facing. At the same time, I need to also thank the Kenya Revenue Authority for extending, this invite for PwC to participate in this conversation, and looking forward to more engaging conversations on different and various topics, on a go-forward basis, depending on what the Kenya Revenue Authority and the taxpayers feel they need to have taxpayer education on. So thank you very much, and wishing you all a good afternoon and a great weekend ahead. Thank you.
Thank you, Mr. Andrew. Mr. Francis, the same.
Thank you very much. I would really appreciate all our attendees. Thank you very much, my fellow panelist, Mr. Andrew. And also, I also wish to appreciate the data they spell out there, all the friends you interact with, as Mr. Mshiri has indicated, that this the session will be recorded. Feel free to share in the groups that you are in, so that at least our clients and potential clients And even other people out there in Kenya, they'll be able to get the information. And when they discuss with facts. Remember, kulipa ushuru ni kujitegemea. Kwa hivyo tulipe ushuru, tujitegemea. Thank you very much.
Thank you, Mr. Francis, for that very apt statement. That kulipa ushuru ni kujitegemea. I would like to thank Mr. Andrew for his time. We could not have done this without you, our very able partners from PwC. We thank you for your continued cooperation with us. Mr. Francis, for that insightful and very apt session you've given to our taxpayers. As you said, they are our ambassadors and our biggest clients. So we would like to thank you for your time, Mr. Francis. To our taxpayers, we just want to appreciate you for taking the time to be with us this afternoon on this seminar. Rather, actually, it is afternoon. This afternoon on this seminar, we just want to thank you for your time, even that we've borrowed a bit more of it because the president said that the most important thing we have with our clients is their time. And our taxpayers are our clients, and therefore we appreciate it when you take your time, and we hope to honor it more and more as we have more and more engagements. This is not the last time that you'll be seeing us. This is not the last time you'll be engaging with us. We intend to make these engagements more fruitful, more often, and as frequent as possible. So if we didn't answer your question today, please be sure that we shall answer it next time. However, if you have a pressing issue, you can reach out to us at callcenter@kra.go.ke or 0711099999. I'll say that again, callcenter@kra.go.ke or on mobile 0711099999. Please also remember that if you want to view this recording again, you can reach us at the KRA TV on www.kra.go.ke or at our YouTube page, Stories Aushuru. Thank you, good day, and God bless. Thank you.